is Yannis, and today we are going to talk about a B lender case study to see what options exist if our credit history is a bit bruised. In this case, we have a purchase price of $800,000, a down payment of $240,000, the loan to value is 70%, the mortgage amount $560,000, the interest rate is 4.65% for 2 years with a 30-year amortization, a monthly payment of $2,477.62, credit score of 510 on a scale of 300 to 900. The client had a double negative event, bankruptcy and foreclosure, discharged just 2 months ago. Annual income of $185,000, under 25% the ratios, and the exit strategy is to go to an A lender in 2 years from now with totally re-established credit with 2 brand new credit cards for each family member. This is an example of a loan where the applicants had weak credit history, but we were able to find a solution because of the flexibility of B lenders. Thank you for watching and have a wonderful day.